What is going on, everyone? I hope you all had a wonderful day. Be breaking down the E-mini futures contract today once again. Going to be looking at our 30-minute time frame, looking at our weekly and our daily time frame, as there was some pretty important information that occurred during the day today as far as price action and technical analysis goes. We had the Fed FOMC come out. We had Jerome Powell come out, make his statement. Had a lot of volatility in action the last hour and a half of the day. Didn't really trade a whole lot in the beginning nor in the end of the day. I did end up pretty good fighting back on the loss that I had yesterday, and had a pretty decent day overall. Finishing up roughly 20 points on the day, cannot complain. As yesterday we had a loss on the day, not a lot, but to come back today 20 points strong in a market like this, it shows growth and it shows improvement. Today, Fed came out, Jerome Powell and the Fed came out with a 25-point basis hike that caused volatility late in the evening after consolidating most of the day. Really didn't do a whole lot, chopped back and forth as it was a pretty rotational day in a small range. We traded just in the upper portion of yesterday's range where the price probe was late yesterday evening. And today we traded back and forth through that for the most part of the day and then had some real volatility in the last three time frames. So, what happened? What did we do? Did anything change? Well, let's zoom in here and we'll break it down little by little. Um, Try to get it to where we just focus on the first portion of the day and exclude the rest of the evening where it started to get real volatile right as Jerome Powell came out. So as you can see, I pulled up our destinations that we had marked on our charts from the previous day. And you can see we opened up an A period right above the price probe, which is exactly what buyers wanted to see. Buyers wanted to see us open above it and move and take out the day's high. We got above it, moved down lower, didn't quite take out M's low, and then rotated up in B period, taking out the previous day's high, which is what buyers want to see, right? If you're a bull, if you're a buyer, you want to see that. Any day that you have FOMC or news events come out late in the evening, you pretty much just trade the first half of the day like a normal day, using all the MGI to the best of your knowledge, because up until that point, nothing really matters. So, the only thing you have to keep in mind is your risk and how the day is going out. Expectations today. I talked a lot about expectation yesterday. My expectation today was a lot less. I wasn't expecting a whole lot of moves prior to the FOMC. So, I didn't really trade most of the day. I kept my hands off the keyboard and basically didn't trade. Only trades that I did take were fading. I faded late in the evening. So after B and C period pushed up, took out the day's high, we didn't find much extension, and then we began to rotate in. Felt like it was going to be a pretty rotational day. Didn't trade an E period. Did finally took a trade in F period, fading against the low 2 to 3 times. I faded and scalped out for 2 to 3 points as this thing pushed back up. Same thing in G period. We pushed down lower. Didn't feel like we were going to go trend. Uh, as it pushed up, I took off my trades. Same thing in H period on the new low because after excuse me, after G period closed, we actually did have a bit of a trend day down with a small set of single prints, only worth about 3 ticks, and we were below the price probe from the previous day. So, with that information, people were getting short, thinking this market was going to roll over prior to the Fed coming in for their announcement. This market rolls over, it creates a new low in the day. We were kind of expecting it to get down to this 9 wide point of control. Felt like odds were really good, but once we seen that this market couldn't really get much extension to the downside, and we hadn't really gone trend or wanted to hold trend prior to the Fed day, either to the upside or the downside, felt like odds of fading this low was really good. So once we seen the low was in at 21.75, we got low 22s, 20, or we got long 22s and 23, began buying to rotate this market back up and fill the set of single prints at 28.50. As we came out, I took off a part of my position at 26, and then took off the rest at 27.75 as we were getting close to that area, but kept battling this 27 spot for a minute. Didn't really like the consolidation, so I was like, maybe we just get out of this trade. We had a good trade there, 4 points, get out of it. What's another point and a few ticks to the trade. After that, I didn't trade anything else. I period opened up, began to push up. We could continue to create a Y point of control, and then in J period, once their statement comes out, this market begins to rally. For what reason? Do not know. A lot of momentum buying and short covering prior to him coming out. So obviously, as you can see, we spiked up really quick, got back above the day's high, got to the high day back from the 9th of March, and then got to this afternoon rally high at 40.6450. And initially, it was a great short opportunity. I missed taking that short opportunity, and as it came back in, I actually had my offer up here at 76.50, thinking we get through that, maybe we dip our toe into the single prints from that day, and then I'd get out at the single print fill. Well, as we pushed up in J period against the afternoon rally high, we pushed up just a hair above it, and then rolled over pretty good, came back near the lows before kind of grinding back up to the top. Now, once we came back up and got back near C and D's high here, I decided to get long. I decided to take a trade. I know exactly why. FOMO, fear of missing out. Had FOMO, not even on front. Had FOMO, and decided to get into the trade around the 47.50 area. And then the 50 area I began to add, thinking this market would push up again and attempt to go get that single print. Market was moving rapidly and in large ranges, anywhere from 10 to 15 points. We were chopping back and forth. We pushed up just a hair, not too much. I got like 2 to 3 points worth of profit. Could have taken it, and this market came in quick as an understatement, rather rapidly, and I got stopped out for a pretty big loss there. Then in K period, I decided to take another position. Once it opened, K period actually took out the day's low, or took out J's low, rotated lower, got near the day's low, and then bounced. Short-term trading, nothing tells you any more than that right there. In K period, as we got near the day's low, that would have been a target for anybody that was short to get out of their position, or anybody that wanted to get long to enter a position right there at H's low. Boom, we rotate up, have a reversal bar, taking out J's high, which is where I initially got short, and then this thing continued to push up even more so, and I got stopped out of position again. Now, where I made my money is when we started to come back in. I realized, all right, I missed out on that opportunity. Let's hop back into action, and it came in pretty good where I got out of the trade for a nice profit. After that, the only other trade that I took was against the 9Y point of control in L period when we pushed down lower. We had a nice quick responsive bounce from 16 actually. I got long 18, but we pushed down 16, 15, and then got a nice reaction to the upside back to the 20 area, and I got out of the trade for a 2-point gain, as I really wasn't sure what the market was trying to do at that point. And then we pushed down lower. I did not. Oh, excuse me. Sorry about that. I did not take the long against the previous day's low or the gap, as that was a good risk reward. And then we rocketed back up near the point of control again before M period open. Now, once M period open, we rolled over, and I took a long position as we started to come back in. I took a long position against L's low and against the previous day's low and the gap, thinking we'd get a quick response bounce. And sure enough, we did. Actually, I had a rather large position on at this point, as I got long right around 4,005, 4,004, and we bounced up pretty good. Not before taking out the day's low, but after we didn't get much extension yet, and we bounced up rather quickly to the 10 to 12 area, and I got out for a nice profit that put me back up on the day after taking a couple paper cuts and losses up here, um, due to fear of missing out. Now, this was a planned trade, expecting us to maybe hold the 4,000 level. And after that push up, we did not get much back up to the back into the day's range as we rolled over and probed to the downside, taking out the day's low, previous day's low, getting into the gap, filling the gap, and then from that gap, getting to that 10 wide point of control. Now, this is why you got to mark these points of control on your charts, because they become targets. Guarantee you, I guarantee you, at least 80% of the traders out there had no idea that 39.75.75 would become a downside target if we got back into the previous day's range. I knew it. Anybody that trades market profile knew it. So why don't you, right? Come learn. Come learn with Paul. I'll leave his description below if you don't want to learn with him. Learn with JJ VWAP Trader. I'll leave a link in the description below for him as well. But knowing where these destinations and targets are, it helps you understand what the market's trying to do when it begins to do erratic price action to the downside like this. So not only did we take out the day's high, we also took out the day's low, having an outside day down and ending up with only the day's high, the day's low, and I believe a 9 wide, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 wide point of control here at E's low at 35.50. 10 wide point of control. Pretty ugly profile. Pretty wacky day, as most of the range was late in the day in K period, L period, and M period. So basically in the last hour and a half was the entire day's range. And then M period was a whopping 72 points. 72 points, guys. That is massive. K period was 51. M period was 72 points. That's a $7 range in the SPY, in the S&P 500 ETF. For us, it was 72 points. So, pretty wacky day. Now, let's go ahead and get rid of all these destinations real quick and then mark today the destinations that we created today. As we kind of knocked out quite the amount here. All right. So, first thing we're going to mark is our high of day at K's high, which was 73.75. Now, tomorrow I will not be making a video, as I will be busy tomorrow evening, so there will be no video from me tomorrow. I do recommend watching Paul, his videos, as he probably explains things much better than I do in a quicker fashion. You get more bang for your time. Now we're going to mark our 10 wide point of control here. 10 wide point of control. Oop, if I can type. 10 wide point of control at 35.50. Now you're going to mark that. It's very important. Then you have the price probe here at 4,475. Price spike, price probe, 4,475. Now, same as yesterday, whereas we wanted to see buyers hold above the price probe. Today, or tomorrow, excuse me, sellers want to see more sell pressure. We want to open up below the price spike, below this price probe here at 4,475. So we want to open up below this level. You want to see us open up below and find acceptance and then take out the day's low. We are back in balance on the daily, so you may just find some chop inside of M's range for tomorrow, as it was a rather large range. I would not expect anything different, to be honest with you. Let me mark the low day next. So if tomorrow we open up below the price probe and can't take out the day's low, you can expect chop between basically all of M's range. You can pretty much expect to trade all of M's range. If you can't take out the day's low, then you will go trade at 35.50. And if you can't take out M's high, you will just basically chop and rotate in between this area. Um, However, if we open up above the price probe, you'll look to rotate up to 40.3550 and then the day's high at 40.7375. In the likely case that we do open with a gap to the downside below, then you'll be one time framing down on the daily, and your next destination is 39.54 afternoon pullback low, and then 39.4675 low of day from the 20th. All right, now let's go ahead and get into our larger time frames, break it down really quickly, and try to get you guys out of here at a decent time. Right now, really ugly wick, really ugly wick, wick. Ooh, on the weekly. Weekly is not looking bright. We got near our weekly balance high and backed off pretty good the first time. Got near, and that is just balance rules, right? You either get near a balance high or low and go straight through it, or you get near a balance high or low and don't go through it at all and rotate back down towards the other end. So far, we got near our balance high and rotated in. Now we could eat away at this tail tomorrow and going into Friday and potentially get above it. However, right now we are defending that weekly balance high. You could possibly rotate back down here to 38.4075 and get an outside week down. I wouldn't put it past this market, as today's range was rather large, and so far this weekly range has been rather large. So would not put it past the market to move kind of like this week did, where it was 236 points. So far this week we've only done 127. So another 100 points to the downside would not surprise me. Now if we go into our daily time frame, you will see that we got near that weekly balance high and then rolled back over with an outside day down. All right. We're going to say that the daily is now in a 2-day balance. We are now in a 2-day balance, kind of back testing the previous balance high, but got below it. We're going to say that this market is in a 2-day balance high, 2-day balance as of right now. Balance high being today's high at 73.75. 73.75 is our 2-day balance high. And then today's low of 66.25 is our balance low, 2-day balance low. So we may chop inside this range for quite some time. Another thing to note, lower lows, lower low, or excuse me, lower high, lower high, lower high, lower high. Does this trend so far this year continue? It's a good possibility. We'll see. Do we create a new low? We'll see. Do we get back below the 200-day moving average? We shall see. Only time can tell. Other than that, ladies and gentlemen, if you made it to the end of this video, please leave a like. Subscribe if you are new. I do appreciate each and every single view that I get, as I do put a lot of time, thought process, and effort into breaking down this chart and kind of giving you guys my idea and thought of what we're going to do. Once again, thanks for the support, everyone that is supporting out there. We'll catch you guys tomorrow. See you.